Welcome to Module 7, everyone. What we're going to do here is basically take an idea we alluded to back in Module 2, the concept of chart reversal patterns, and we're going to look at one in particular a little more intensively. So we're going to look at the standard and sloppy 1, 2, 3 top and bottom patterns, and we're going to look at ways that we can use MACD to identify the turning points, to make the pattern clearer in our minds as we see it unfold, and most importantly of all, how to trade it and maneuver around it. So what we'll do here is we're going to start with a standard 1, 2, 3 bottom pattern. And this depicts more or less what's going on with price action on your chart. The first thing to happen is that price makes a new low. It drives down to a level at which it finally achieves support, and for whatever reason we're not terribly concerned, but we just see signs of support coming in before price then bounces off that level to a new interim high. This will often take the form of a classic Fibonacci style retracement, not always but very often. So if you see this kind of pattern unfolding, a sharp drive down, price bouncing up, you'll want to go ahead and apply your Fibonacci grid and look for resistance at a critical level such as 38 or 50. Once price has hit that number 2 position and found interim resistance, it will then drift back down into the area of old or prior lows. It's testing for support, testing to see if support will come in and allow the market to then move higher. So if you're a newer trader, it's very important to bear in mind that to qualify as a standard 1, 2, 3 bottom, the number 2 position must be higher than the number 1 position, the number 2 position must be higher than the number 3 position, and the number 3 position must be higher than the number 1 position. If the number 3 was at or below the number 1, you would not have a standard 1, 2, 3 bottom. You would have either a double bottom or a sloppy bottom. And we're not going to be looking at double tops and bottoms because we're just going to focus on this one particular type of chart pattern. But that, in a nutshell, is what a standard 1, 2, 3 bottom reversal pattern looks like.